Good morning, everybody. Welcome to the Flow Show. It's Thursday, Zed's Day by the looks of things. Everyone's waiting for something to happen. There's a few things happening. Okay, man, what are you waiting for this morning, mate?
Good morning, Ryan. This morning, I'm waiting for the afternoon.
Waiting for home time.
No, I'm extremely looking forward to a very short night tonight.
Oh, yeah.
Because obviously we are going to try to be up for the Bank of Japan and see what they come up with. Well, US data today, but will they matter in the big scheme of things? Not in the big scheme of things, for the next 24 hours, I mean. Will they really matter? They should, but we'll see.
Yeah, we shall see indeed. It's going to be a wonky night tonight because the BOJ is a bit earlier, isn't it? Sorry, a bit later now with the clock change over here. So we got that Tokyo CPI up for the Tokyo CPI and then grab an hour's kip and then up for the BOJ probably.
Yeah, so we are, what is it? It's 6:30 in Japan, so we are 8 hours. So that's about anywhere between 3 and 4:30 our time, I'd say.
Yeah, going to be a long old night.
Was a running joke in when we were in the banks, and it's still going on. That people would always ask, like, what time is the BOJ, but they don't have a preset time. It's always like a zone, and the longer it lasts, usually the more there is a possibility that they do something. And actually, last month was a pretty long meeting, if I recall. Just before the end of the fiscal year, so we may be in for another one unless they decide everything very quickly, whichever way they want to go.
Yeah, but, yeah, I'm not looking forward to it. I'll give you a clue. I'm going to be out because I have to be up early Saturday morning to get up to town to meet Steve. So yeah, it's going to be. I think there's going to be a few people checking out early tomorrow afternoon.
Yeah, I trust so.
Yeah. Right. Well, let's see what's going on before we get into all that. Over in Japan, there's a bit of data out, not that it's on this bloody calendar. We had some department store sales numbers coming in, year-on-year numbers for March. Nationwide sales up 9.9% versus a previous 14%. So nice big numbers there. For Tokyo itself, it was up 10.9 versus 18.5% previously. So some good news on the retail front there. Finance Minister Suzuki has obviously been watching what's going on, but doesn't deem it necessary to offer anything stronger than the usual guff. Watching FX moves closely, blah, 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 blah. We've had another government official out saying the same old thing as well. Now, Morgan Stanley have plotted a possible wrinkle for tomorrow's Tokyo CPI. They say, we think there is a risk of a substantial decline in the April CPI, Tokyo CPI, due to a special factor of the effective elimination of high school tuition in Tokyo. But that's depending on the decision by the Statistical Bureau, whatever that means. So they're pulling a wrinkle out the hat, it seems, for that. Anything behind that, Kay, or are they just clutching a bit?
You know what? I haven't seen this thing. First thing I hear about it, was busy on perhaps other stuff this morning. Well, it could be. So what is it? They're cutting the tuition fees for schools?
Yeah, the elimination of high school tuition in Tokyo.
And that happened right now, or just a month ago or so.
I'll have to double check. I did put.
Yeah, I mean, there's something to check. Yeah, of course, it would have an impact. Interesting. Yeah, gold is always on top of things, so that could be a factor.
But it took effect. Yeah, it took effect in April, according to the article. It looks like they're all scrambling around to have a guess at whether this will be a factor or not. But if we do see a wobble, then maybe that's what it is anyway. But I don't think we need to speculate too much on it. As I say, if it happens, it happens. We won't be able to do anything about it anyway. So that CPI data is going to be the big one tomorrow ahead of the BOJ. I haven't got it out there yet, so can't even look at it. But inflation is expected, core inflation is expected to come down to 2.2 from 2.4%. So the market's going to be looking, if it's softer than that, because that'll put it far closer to the BOJ's target, but they want it above target. So that won't be good if it does come lower for monetary policy. Right, moving over to the UK. Yesterday we had CPI industrial trends. This is for the manufacturing production side of the economy. Industrial orders that came in another negative -23. Although the selling price component rose to +27 from 21 previously, and optimism went positive at 9 versus -3 prior. Now this CPI stuff is usually glass half empty rather than glass half full. But anyway, a little bit of improvement there might add to some of those green shoots we've seen going on. Over in Germany, the government came out with its forecast that was rumoured a week or so ago. They now expect 2024 to grow by a whopping 0.3% versus the whopping 0.2% previously. Hardly cause for celebration there. They expect another whopping 1% GDP growth in 2025. They also see inflation lower at 2.4% this year versus 2.8% previously. In the comments, say there are signs of a slight economic upturn. Prices have fallen faster than many predicted. They say structural problems continue to worry and structural changes are needed to achieve higher growth. Over in Spain, we had some PPI data out this morning. Still coming in with the negative numbers in Spain. Month on month was down 2.2% from a prior -2.6. As you can see there, year on year down 8.2 versus -8.5 previously. So the disinflationary metrics still feeding into Spain there. ECB's Muller says he's not comfortable starting with back-to-back cuts. So happy with cuts, but he doesn't want to see a July cut coming soon after the potential June cut. Not a lot of the data out. Yesterday we had the NBA data dropping as well. Keep an eye more so on this rate, which is ticking up yet again. You know, we're getting to some very lofty levels in these interest rates, which should start to impact housing at some point, although doesn't seem to be doing too much at the moment. Mortgage applications down a little bit, refis down as well, likely a factor in that higher rate that's coming in. Durable goods beat expectations, pretty solid numbers from those. Although core goods were a little bit softer. I did look at the details, like I have been for the last couple of months, the more consumer-related components, and they had a bit of a bounce from negative numbers we saw in some of those components last month. Not hot or anything, bounces, but a bounce nonetheless. Canada retail sales came in worse, so that makes things a little bit more stickier or unstickier for the BOC. We also got their latest minutes, if you like, deliberations there, and according to notes, they see further inflation progress, but they want to see it sustained. Officials are more concerned about upside risks to inflation, and any monetary policy easing that comes is expected to be gradual. There were some lines and comments in that make it sound like there's beginning to be a little bit of a split between the ones who want higher for longer and the ones who want to start moving towards cuts. We know that Macklem's been a little bit more on the dovish side of things in recent comments. So let's see if he's going to lead some of the others over to his side. On the political front, Spain's PM Sanchez says he's considering quitting as the PM. This is to do with some shenanigans apparently going on with his missus that everyone's jumping all over. But there is important elections on the 12th of May in Catalonia, the second largest region in Spain, and there's all sorts of stuff going on over there. I don't know if it's going to be impactful for the euro, but we need to keep an eye on that, half an eye on that anyway, just to see what comes from that. That's it. Not a lot going on. We're all waiting for this data to drop. Kay, any bits and bobs you've seen?
No. Only well, there's been some chatter, and again, another one is complaining in Japan about the weaker yen. That's the Japan Airlines CEO. Totori, who said that they are seeing the Japanese weak yen as a big problem, and they'd rather have it at 130, 140, and that comes on the back of the Keidan Ran CEO head saying that this is starting to be too weak, and so sorry. And I was thinking, it made me think about the end of the year, like end of last year, Swiss companies who were starting to complain about the SNB sending the Swiss franc far too strong, and we have seen as well Roche's profits decline there, and they're also putting it down to the stronger Swiss franc there, and so this is something for some companies. Of course, this weaker yen is a boon. I mean, if you are a big car maker, if you are one of those big heavy machinery makers and have facilities outside of Japan producing the goods and then repatriate profits, it's going to explode the profits, of course, for the exporters. But it does seem that the rest of the Japanese companies are now starting to complain quite a bit, and it just made me think of that Swiss SNB thing. I said, well, are we not going to see something? Is there not something bigger in the pipe now that they get like kind of official complaints via the press, of course, but they will have heard them as well over there before it comes out in the press. So yeah, that is something that caught my eye overnight. The BHP Anglo thing, I don't really know whether it's a big thing. It's big in the mining sector, but we need to dig a little bit deeper in that. I think it's an old shares takeover bid. So I'm not sure whether there is effects to be done on if Anglo would accept the bid, but I think this is a more longer spread out story to develop there. But no, only these Japanese things, and another article saying that the Japanese insurers halved their bond, some of them halved their bond purchases, waiting for the Bank of Japan to take yields to where they want it. That is the other thing in the press, and then the Japanese flows, which are we have to know that they are nearly a week delayed, right? We get them on the Thursday. For the week before, but we have seen, so yeah, if you grab those quickly, there's a few more details in there, so that we see the bond buying stuff, so the Japan still putting their money at work a bit elsewhere. The foreign investment in Japanese stocks, that's a bit of a negative, and we've seen the Nikkei come down, but the other interesting one was that the foreigners have been selling quite a few, about $10 billion worth of dollars of Japanese bonds, which to me means that the foreigners think that there's a few more rate hikes in the pipe. That is possible over there as well. So in that number, so that's really it.
Thank you very much, mate. Pound Aussie was the first thing I checked this morning when I saw that headline. But yeah, you're right. It's an all share deal, so there's no front running going on there for FX like we can see sometimes. Right, well, let's have a look at what's going on now. What's the story today with the yen? We've got this break up through 155. It's motored on up again. So there's several things to consider here. Firstly, all yen pairs are going. Okay, this is a yen story this morning, and this is what's driving the majors. Okay, there's no fundamental reasons for euro dollar, cable, Aussie dollar all to be stronger. So know what's driving the bus this morning. It's all about the yen. Okay, which then you've got to be careful, because if we're not trading fundamentals in euro dollar, we're just following what the yen's doing, then you've got to be careful, because if that keeps blowing up, this could keep going and it's going to carve through your levels until it hits a big one that is too fundamentally important for a pair. So, but conversely, don't get sucked into these moves either. Yeah, we've had another move, above 107, but if these yen pairs suddenly turn, there's a good chance that these turn with it. So, as I say, know who's driving the bus this morning, and the yen is driving the bus this morning. Now, the other thing for this, and because of that, is that this break, yeah, it's a decent break, but it's 70 pips or whatever. We're not quite in intraday volatility mode for the Bank of Japan. We're not seeing 200, 300 pip swings in sessions and half a day or whatever. So volatility-wise, that box isn't really being ticked. However, what is being ticked is the speculation box, and the other box that's being ticked is Mr. Kander's 10 big figures, which puts his lid.
Actually, not. Actually, that box is actually not being ticked.
No, it's not, but it's close to being ticked. That's what I was going to say. We're close to that.
Prior BOJ.
It's what, sorry? Sorry, mate?
Yeah. We went into the BOJ on the 19th of March around 149. So we're actually only 6.5 big figures higher, which is still giving us, in theory, 3.5 big figures if we want to pin our hat to what Kanda said. But I'm not. I'll give my comment later. Just continue, right?
Yeah, I thought he was. He was talking about what it done already, and from 146 it'd be 10 big figures, which put it at 156. Well, I may have got that comment wrong. Who knows? Either way, we're up here, and it's getting towards another big figure, and the buttons are getting pushed. But as far as intraday volatility goes, we're not got it. But because this is the yen moving, and we're not seeing yields moving, we're not seeing US yields moving, we're not seeing Japanese yields moving. This for me is putting it in firmly in the speculation category, which is something obviously they are very hot on and been talking about for quite some time. So is the market trying to push some buttons try and get a reaction before the BOJ? Are the MF going to bite ahead of the BOJ? I guess we'll have to see. If we go another 100, 150 ticks before the BOJ, mate, that's got to put it in the zone, hasn't it?
Oh yeah. But it's I've said this morning, and it started yesterday. Really, I think what's happening in the market now is probably partially the yen crosses, but I also think that in the other dollar pairs, the market is now worried about if MOF intervenes, that in sympathy. And I went back to look at what other interventions did, and but I didn't really need to, but because I know what the effect was. But if they start to sell a lot of dollar yen, which is a risk tomorrow, of course, it's going to push the other dollar pairs lower for a starter. So that's what we are seeing right now in the cable, in the euro dollar, Aussie dollar. Well, I mean, other dollar pairs barring Swiss. I think the euro Swiss is holding up. Dollar Swiss is virtually not moving, because that is the other part of the equation, is that if you can't sell yen anymore, you're going to be probably selling the other lower yielder or lowest yielder after that, which is the Swiss franc. So I think that's why the Swiss is weakening relative to the others as well. I think really that is it. I mean, the market being a bit long dollars, we knew that. Getting out of those dollar positions, because imagine that that MOF intervenes tomorrow and the rest, and euro dollar goes to 108.5, 109, cable goes to 127 again. It's all possible, you know, before the counter punch comes, which I do believe that in case of an intervention we are going to get. This is really the scenario that I'm looking for. If in case of interventions, I mean, if we see an intervention, I see the other dollar pairs, so the dollar weakening versus the other, but then roaring back afterwards for as long as those US data hold up, you know, because we're in a very big mix, and there's a lot of position management going on here. We have this US GDP and all the data that come with it. Today we have that famous PCE. Tomorrow we have the Bank of Japan in the meantime. It's a very hot 24, 36 hours that we have ahead of us. And you know, and in the mix, tomorrow we are trading value data end of month. So it's a lot of it is position squaring what's going on here right now. But that those yen crosses go up in the meantime is just a factor of the yield differentials and the Bank of Japan still saying that they will be slow. But I do have my my little opinion about that. I really think if we talk about Bank of Japan, then I think that the chances for a hike tomorrow have dramatically increased. And I'm not going to put them at 50-50 perhaps, or above 50%, but with what's happening in the yen trade weighted index, with what is happening in the market really and I'm not only looking at the dollar yen, but also at those yen crosses, as I've been already saying, and the fact that MOF is really angered, I think, at the reaction that we've seen after the first hike of the Bank of Japan. I think that the percentage of risk for a hike tomorrow have dramatically increased. That is my view.
Yeah, thanks, mate. Yeah, I don't see much wrong with that. It's one of those situations. They're still in that situation where they're screwed whatever they do. You know, if they hit it with intervention now, let's say they knock it down 400 pips, it takes it down to 151s, that sort of area, and the BOJ are all less than hawkish, it comes right back again. But on the other side, if it goes another 200 pips today before the BOJ and they hit it after, it still takes it back roughly to where we were. So I still don't see any which way that they get a lasting or big move.
Yes.
And like you say, unless they hike, but then again, can they justify a hike based on the data? If those, they have to ramp up those CPI forecasts to justify a hike on one aspect. And are they going to do a big jump in expectations?
Well, yeah, okay. You know my view. To me, inflation is not everything. Of course, it's their mandate. Of course, it's this and of course, but they may judge that. I mean, it wouldn't be the first time that a central bank hikes because the currency goes down, right? And that is one of the reasons why. Because speed is not there in the dollar yen, but speed is definitely there in the yen index, in the yen indices, if you take the yen overall. But yeah, I still agree. I mean, my very long-term view hasn't changed. I still think that unless, I mean, there's one condition for the yen to lastingly go up. That is the rest of the world crumbling down around it. And if you start to see a weakening, especially US, because that's their biggest investment area. If you see the US data starting to crumble, if you see the equity market starting to go down with it, then I think we can see a longer lasting yen going up, and but it's virtually the only condition, because even assume that they hike tomorrow 25 pp's. I think if they hike, the market is going to have to second guess itself, right? Because that's going to
Yeah.
send an extremely strong signal. But there's that extra condition that is going to have to be met, unless MOF comes in tomorrow and says like, look, I'm 150 offered and you can pay me for whatever amount you want. This dollar yen is not going above 150 anymore, and that is a possibility, but it's going to be a very hard fight if they want to do it only via interventions, and if Bank of Japan doesn't give a helping hand there.
Yeah. And again, even if they do hike, say they hike by 25, then the market, they're not going to go on a hike spree and be up at 4% by year end. So the market will probably still reverse that by saying, well, okay, you've hit it with a 25 pip. That doesn't mean you're going to hike again next month. And you're not going to be rushing to get rates up. So it's almost counterintuitive for them to do that just to combat FX when they don't need to be hiking at that rate for the future. It's all roads point to a weaker yen unless they do something that we haven't seen before, or like you say, just put a bit of a flooring or cap on.
Yeah, but the thing is, if they hike, Ryan, and they signal that they are ready to do more, and just assuming that they do, okay. I mean, I'm not, as I said, it's still not over 50% my base case, but assuming that they would hike tomorrow, and they signal a kind of willingness to continue. The thing is as well, on the back of it, you will see JGB yields rise. And we know that the Japanese insurers and the Japanese investors, they are on the sideline right now. If you see JGB yields go higher, and then I'm especially talking about the longer end, right? 10 years and well above, because the investors, they do tens, but then like the JPIF, but then the other insurers, they are even looking at the longer term. That could bring the yields, Japanese yields, into the zone where they will be more interested in going. Hey, there you are, right? These 20 years, stick on that for a minute. I think we need to go above that prior spike there, 175, closer to 2%, and then you will see, I think, the kind of flows emerge that Japanese insurers are going to show more willing to get back into JGBs, which would then mean that they may be on the back of it, unless they do everything completely hedged or unhedged. Then you may see flows that actually are yen positive as well. And yeah, it's all a follow-up of what's going to happen. But the decision tomorrow, I think, of the Bank of Japan is going to define how hard or how less tough it's going to be for the MOF. Because let's face it, I mean, if the Bank of Japan doesn't do anything, so let's do the other case. If Ueda comes out and says like, oh yeah, inflation is going our way, we can be patient. The MOF will have to step in, otherwise this dollar yen trades 170 next week.
Yeah.
Really, it would, because the market would really, if the MOF doesn't intervene on a dovish or neutral Bank of Japan, I mean, the yen is toast, mate. I mean, they really will have too hard a job, and then they will really have to step in and put it somewhere where speculators don't like it. But that's going to be then extremely difficult unless the rest of the world crumbles around it.
Yeah, and I mean, the other side of the coin is that they'll need these rates to be in, real positive. At the moment, at inflation, they're still negative. They're still obviously getting positive yields, keeping them in, US with 5% yields and 3% inflation. They're getting the 2% here. You're still in a negative. So I think that line's got to be crossed between real rates and what we're seeing at the moment. But
the hedging costs come into play, and if you hedge your longer exposure on the US bonds, for instance, you're paying because your yield curve is in inversion, and so they're not always looking at like really are JGB yields above the interest rates. They do look at hedging costs elsewhere as well, and if you have inverted yield curves elsewhere, which we still have a bit less than at the worst, but which we still have, they could still be tempted to bring some money home. But that discussion would take us another hour and a half, I think.
Yeah, we won't do that. LAU says tomorrow's PCE data may help them. Yeah, it may help them. It helped. Well, what happened in the US in 2022, 2023 helped them when we were up at 152 that time, and we got a turn in the US. But they can't do anything about US data. PCE may help them tomorrow. The Fed next week may not. The NFP next may not. The next CPI report may not. So they're not going to be making decisions based on US data. If it goes their way, it's a bonus. If it sinks the dollar, but other than that, they can do nothing about it, and they'll just do what they can do for their own personal selves, sort of thing. Right, so it was, as we've been saying, you know, we've got a few breaks, a few moves. Not that I'm going to really trust them at the moment, but if we get to some decent levels that might be worth having a tap, it might be worth having a look at. Cable back above 125, it's mooching on up. We're probably going to be playing half figure and big figure ping pong with this one, so we had a bit of a traffic zone around that 125 and a halves. That's probably going to be the next area to watch, then into 126, and if we keep going higher, this 125 at 124.50 showing up again yesterday, so that's probably going to be the first main line of support if we do see a dip back in that one. James was asking, what does euro sterling do on intervention? Probably not a lot. But he's right. This will move on the speed, as we're seeing this morning. This is moving on the speed difference between cable and euro dollar. You know, I point it out quite regularly that cable always does a bit more than euro, whether it's going up or down. But anyway, here we are back below 85, 70, 80, or trying to waffle around that area. Again, we've given up all this. We might be going back in the box, but if we get a flip around in yen pairs or flip around in the dollar, then this will probably go back up towards 86s again, just based on that speed difference. But for intervention, it's probably the last pair I'll be watching for what happens when if we get intervention. So, but yeah, speed is the thing here.
For talking about interventions, really, I think it's get your wider levels on your pad in whatever you choose to monitor. Let them intervene. Don't look at your charts before the interventions are done, because anything can really happen. And as I've already said on another show, it all depends. And we're still in the assumption, talking in the assumption of an intervention. They may not do anything tomorrow, and then it's really real Armageddon, I think. But for the yen at least. But the thing is as well, then grab your charts again and see at the end of the day, are well after the US numbers and stuff, where we are to decide to go in. I have a rough plan, but I've reduced greatly my risk, because it can really go anywhere. I mean, if people, assuming that people are long sterling yen, for instance, cable could come down together with an intervention in the dollar yen. I mean, euro dollar, if people want to liquidate euro yen, euro dollar could even go down. Although the base reaction would be that, first of all, and that is what I think we have been seeing over the past 24 hours and perhaps going on over the next 10 to 12 hours, is that the dollar is actually suffering a little bit because of the fear of the intervention, because in sympathy the rest of the dollars should trade a bit lower if they intervene. Okay, so it's going to be and an additional mess would be that if the Fed and ECB would join, because then your euro dollar is going to be an absolute mess of a trade, because ECB would sell euro yen because they're based in euro. They will not sell dollar yen unless the Bank of Japan specifically tasks them to sell dollar yen. But usually ECB, that's what I know out of experience, would sell euro yen. But then they would call up one of the bigger European banks to sterilize the euro dollar sales and buy the euro dollar back. So imagine what a kind of mess we could be in tomorrow.
Yeah, and that's a wise point. Something we've been making. It doesn't matter if you're not in any yen pairs. You've got to be paying attention to if something happens, because whatever pair you're in, give or take, if it's dollar related, especially, is going to be affected by this. So I'm not running, apart from me dollar China, I'm not running any dollar trades at the moment. Just got my euro sterling in that option that put I bought the other week, which I might do another one depending on what the CPI does, or before the BOJ, just to get a bit of trading. But I'm very, very cautious about jumping into a spot trade in dollar yen or anything else at the moment.
Speaking about sterling, Ryan, have a look at the number that just hit the wires. It always comes out during our flow show, the distributive trade survey in the UK.
Oh, that thing. The other CPI one, the retail sales one. Where are we going?
Just a little bit higher.
There we go. Minus 44. Brilliant. Look at that. Excellent stuff. And it's giving cable a little bit of a knock. Wonderful. See, I told you, always glass half empty with these CPI lot. Right, Kay, you got anything in particular you want to show us? I'm doing nothing. I'm just sitting and watching at the moment.
Yeah, that's the thing. You know what? I'm going to show stuff that could, in theory, because again, it's the theory on interventions, because everything, as I said, depend on how they would intervene, and we are still in the assumption that they will, which is still not a done thing either. We have to take everything into account. This thing looks like a little bit bid here. So I did give it a little try, but already managed a little bit. So whatever happens and whatever I do over the next here, the only thing I did so far was position reductions. Okay, the only thing I did on this UK retail thing was buy a little euro sterling, because I think we are on a small support here. But I'm not going to get married with it. If it goes through 85.5, I'm done and dusted with it. But this one, I bought a little one yesterday on this break, and the Aussie cat, and trading a little bit higher. I think we can, all else equal, of course, and that's a big if, in the next 36 hours. This looks a little bit bid. It's also on the back of those weaker retail sales yesterday, the bit of a weather vane Macklem behavior as well. I'm not a big fan of the Canadian dollar right now, and this is a cross that I should be relatively immune to what's happening, because they are both relatively similarly correlated to risk in a way. So also being asked about risk on possible interventions. That is a great question, and a question which is very, very difficult to reply to, because everything depends on what kind of intervention they would do. If they go and sell in the market and do a one-off, put dollar yen, let's say they do their usual 500-600 points from where we are now, put it down to 150. The rest of the dollars will probably spike. The rest of the dollar will probably go lower and then come back afterwards. That's what I think. But it's very tough to know exactly what's going to happen on risk. because traditionally a lower yen is is responding to a risk positive environment. But if you put it higher, it would mean that it weighs on risk. But I'm not completely sold on that idea either, because if you stabilize the currency, that's somewhere risk positive as well. So it's really something that as a trader, sometimes you have to wonder about things, but then let the market do its thing first before knowing what really is going to be how risk in general is going to respond. I'd say if they stabilize the yen, the finality of it may be risk coming back slowly into a more positive daylight. But that's just a thought right now. I'm really not going to trade it. This one, as I said, this is the other funder. If they would intervene, I suspect that, again, in sympathy with what's happening in the yen, we could see a bit of a lower. It's a low yielder. If they buy low yielders can benefit from it a little bit. I suspect perhaps a little bit of a move down here. I have reduced again there as well my positions. I'm traveling very light into what's into the next 24 hours, because I want to keep maximum room in my books before deciding what to do. And it's not worth taking too much of a risk ahead of what may be either side, because it's a bit of a lottery right now. But I would think that if we get interventions and this is dragged lower over time, the market will react in a way that it says that, okay, if we can't sell yen right now, we are going to hop onto the second low yielder with the lowest yields, and where we still have, as I was saying at the top at the beginning of the show, those SMB still not very worried about what's happening in the Swiss franc right now. I could see a move lower here and then gradually come back. So if we see interventions, I'm going to let this play out if we get any lower, but I'll be looking at re-entering at some stage, and it will be more time dependent, volatility dependent in the yen, and then I will make a decision on this one. But this one is one that I'm keeping a very close eye on, and it, in my opinion, perhaps better to look at a cross than look at a dollar pair, although I'm always looking at the dollar Swiss as well. You know, we are still wrestling with this 91.5 in the dollar Swiss. So any interventions, I think we can see it a big figure and a half lower, just in sympathy. It would be far sought, I think, if US data don't show weakness. It would be far sought to be wanting this around 89 again. But if ever we see this one around 89 again, I think I'm really going to press a few buttons and go back long, because I think when the dust settles, Swiss could actually weaken further. Okay, so that are the ones that I'll be looking at, and the rest is really big lines. You know, euro dollar, we're back here. I think it's a factor of the market not wanting to be too long dollars going into what's happening in the next 24 hours. If you want to put some 11 on it, 108, and then 108 3/4. I would suspect that any intervention is not going to be enough to put it at 110, unless the dollar data come in much weaker. How big moves of intervention can be bared by speculators, Ali? Well, if you look at the latest moves in the yen, they've had a lot of joy being long those yen pairs. I think pure speculators. We've seen some notes coming out of banks that they actually saw not too many yen sellers anymore of late. So I think the longer termers, they will not flinch unless MOF says we put it at 150 and we cap the 150, and now you do whatever you want. So That is my view. So I think they will bear a move down to 150. And actually, some of those speculators, I think, may have done like Ryan and I did, is buy like a cheeky downside in case MOF intervenes. So you only pay away some premium, and you don't. They don't have to manage their books too much, you know. What else is there? Cable brand, yeah. Again, I think market perhaps a little bit over bearish on the sterling. I'd say here 125.5 up to 125.70 is the first, and then 126 around there. But again, we don't know if they will intervene. If they will intervene, perhaps cable will shoot up all the way back up to 127. Who knows? But if that would be the reason, if an intervention would be the reason, all else equal with the US data, I'm going to be a patient, but probably start to buy a few dollars on outsized dollar drops in a few pairs. Okay, and I think that's about it, Ryan, for now.
Thank you, mate. Thank you very much. Yeah, so I think the lesson from this is look at your charts, but pick your extremes and look to trade your extremes if we get anything like that, and be careful if you're in positions at the moment that could get a bit of a spanking if they do something. James just raised a point. We've got the GDP, Q1 GDP from the US today. Usually the first print gets the biggest market reaction unless there's a huge variation in the secondary, in the first revision. So keep an eye on that. But as he's pointed out, there's a lot of people looking at this Q1 PCE number to extrapolate over to the number tomorrow. Obviously, Q1 contains March, but we don't get the March PCE until tomorrow. There are some differences between how this number's put together, counted, whatever, and the actual PCE tomorrow. But as James noted in our chat room, there's ING particularly looking at extrapolating. If we get I think it's a 3.42 year-on-year number, that would confirm the expectations for a 0.3 PCE monthly number tomorrow. And if it's 3.40, it'll be a 0.2. So there's going to be a lot of propeller heads looking at this one and try and draw it into the PCE tomorrow. Long story short. So be prepared for that part of the equation today when we get those GDP numbers. Anyway, that's enough for today. Me and Kay are going to go and get our beauty sleep ready for tomorrow morning, and go and make sure we stocked up with coffee. Have a great day for the rest of your day. Don't forget to catch us on Face in a while, and we'll do it all again. Have a good one. Thank you, Kay. Thank you, everybody. See you all tomorrow morning. We'll finally find out what happened.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.